I know it came out after the the trade data out of China. I mean, when I go through the calendar and stuff, right? You write stuff down and you set up your entire week, right? So you know when there's big important China news, you sit down at your um, at your charts, right? And you trade it, right? Or do I just do that for fun? So, anyways, I'm sitting at my desk yesterday. The Chinese trade data come out better than expected. So what do? Well, yen's going to weaken, kiwi's going to strengthen, and like a buffoon. I hope you don't mind me being critical of myself. Yeah, I rocked it in here. Yeah, woohoo! Good job. Yeah, obviously got out a little early, but looking at it collapsing, I suppose it's not that bad. So made my 10 or 15 pips. Wow. But a nice little scalp. So anyways, if you wanted to buy a kiwi, you know, this isn't the worst thing in the world. But you better set it up right on a smaller time frame. So that's hourly. Hourly, says, get ready, think about it. It is a market open. It'd be a good time for it to reverse. So maybe drop into a 15-minute or a 5-minute and say, okay, first of all, market. Do you want to trade this as a buy zone? Yes or no? It doesn't mean you have to buy it. It's just, do you want to play it like a place where you might potentially buy it? You don't know what time you're going to buy it, but is that a price you might consider? Now, you might think, well, a little closer to 77. All right, fine. So we're in this 77.20-ish area. 77 psych is coming up. I like to buy, on a breakout up, I like to buy somewhere between 0.00. It's a standard 80-20 thing that I've taught for a million years. So now you can drop into a 15-minute chart. What does the oscillator tell you? Does the oscillator tell you absolutely no way? Don't even think about it? Or does it say plausible? It says plausible. It's oversold, but you want to be a bull. Well, yeah, you want to buy it when it's cheap, right? So it doesn't say yes, but I'll tell you what, if this oscillator moved back into the trade zone above the 25, then yeah. Okay, that's the first step. The next thing you can do on this 15-minute chart is have it go up to the 21. What do you think is going to happen when it goes to the 21 and then runs into this area? What do you think is going to happen? There's only two things that are likely to happen. One, it drops like a ton of bricks and you're wrong and you don't get your opportunity. You're like, well, I guess that ain't support. Or two, it's going to come down at least a bit and then head up. And your job is to be in sort of, oops, come on, drawing tool. Your job is to be long about there if you're doing your job right. And by then, this oscillator will be cycling up, probably closer to the 50%. And you want to be long here and strong. And the cool thing about being patient and disciplined and having a plan ahead of time, if you're waiting to buy it at 20 and it comes down to 20, right? And then you're waiting to buy it at 0.0, comes close to 0.0, and then it kind of goes to 95, and you're like, is it going to bounce? Then it goes to 85, is it going to bounce? And all of a sudden, nothing's happened, and now you find yourself down here the whole time you wanted the long, but you never got your trigger, you never got your entry. And you're like, oh man, I've been sitting here for 2 hours and watched this thing fall. Too bad, so sad. But you know what? Better than losing money. You know what one of the worst feelings in the world is? To work 14 hours in a day and lose a ton of money. Have you ever done that? Just work like a dirty dog and then lose a small fortune. Yeah, good job. But we've all been there, right? So I'd rather stare at my charts for 14 hours and say, you know what, I never got a setup. I was wrong on everything. I thought maybe the yen was going to be weak. I thought maybe commodities, but anyways. And by the way, one of the things on the calendar yesterday was the Department of Agriculture's crop report. right? Do we remember? It was the Dukes. It was the Dukes. We talked about trading places and everything. Did you read it? Did you see, since we're talking about Kiwi, that they expect a decline by, I think, I'm just going from memory here, 3.8% in dairy prices in the upcoming year. What does this mean for Kiwi? It means down, 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 down for New Zealand. Why? Because a huge proportion of their GDP is measured in dairy sales. Huh! So that was also on my mind a little bit yesterday when I said, you know what, I'm long Kiwi on the jobs report, or no, on the trade data from China, but you know, I got this crop report too, and one just kind of shows a little hope out of China on the short term, but the other one shows no hope on the long term. So you know what, give me my pips. You know, I pulled out a couple $100 out of that and walked away. Easy peasy lemon squeezy. Now, what do you want to talk about?